FHA is one of the simplest loans that you can use when buying a house. And so today I want to talk about why it is one of the simplest loans that you can use, what the benefits are, and what the requirements and the cost of using FHA loan product. If you've not yet subscribed, go ahead and do that. Hit the notification bell so that you can know every time I upload a new video. So let's jump right into it. FHA loans, benefits, requirements, and cost. Before we talk about that, I wanted to explain what an FHA loan really is. An FHA loan is a mortgage loan option for U.S. home buyers, and it is guaranteed by the Federal Housing Administration. And that's an agency of the Department of Housing and Urban Development and issued by FHA approved lenders across the country. FHA loan is very well known for its affordability. Namely, it has a very low down payment, about 3.5%, and it has a very flexible or lenient credit score requirement. Now let's talk about the benefits. The benefits of using an FHA loan have minimal down payment, and it makes it ideal for a home buyer who does not have a lot of money in savings or don't have a retirement account or things like that. If you have at least 3.5% of the price of the house, then you might be able to buy a house using an FHA loan and not having to break the bank, because they only again require at least 3.5% down. And there are also programs that can help you with that 3.5% to make it a loan that you can actually buy a house with zero down payment. FHA comes with a very low credit score requirement compared to other loan options, right? You only need 580 credit score. However, most lenders, even though FHA only requires 580, most lenders do not qualify you with a credit score of 580. They're looking for something higher, something more like a 620 or a 640 and higher. One of the biggest benefits of the FHA loan is its low down payment requirement. So if you have a credit score of 580 and higher, and you have a 3.5% down, you can buy a house. And in some instances, if you can couple that with down payment assistance, you can buy a house for as little as zero down. With FHA, one of the benefits as well is that there are many different types of eligible properties. So you have condo units that you can buy, duplexes that you can buy. I always think the duplex is a great idea because you can live in one side and rent out the other. They're manufactured and mobile homes that you can buy using FHA loans. Again, talk to your lender to know what type of property you can buy based on the loan that you are receiving. Now, there are different types of FHA loans. You have the fixed rate FHA loan, you have the adjustable rate FHA loan arm, you have the FHA energy efficient mortgage, and then you have FHA 203K. These are just the four that I'm going to mention for you. There are other loan options available. Reach out again to your lender to find out what best works for you. The fixed rate FHA loans, it is one of the most common ones, and they offer reliable, consistent payment that a homeowner can count on. So this typically come in a 15 and 30 year term. They have the same interest rate for the entirety of the loan. So if you have a loan at 5% or 6.5% for 15 years or 30 years, your interest rate will never change. And that means your mortgage payment for the loan, because just the payment, right? Don't include taxes and insurance and all of that. But that part of your mortgage will never change. But you said if I have a fixed rate, my mortgage never changes, but I've owned my home now for 3 years or 4 years, and my mortgage has changed over the course of the years. Well, your base mortgage payment has never changed. What has changed that have caused there to be an increase in your mortgage overall, because remember, if you have an escrow account, your mortgage is going to include that. So your taxes, your insurance, that's going to be in your mortgage. If there are any changes in these two things, then you're going to see a change in your mortgage payment. But if you remove the taxes and you remove the insurance, you will realize that the base of your mortgage payment has remained the same over the course of the years, and it's going to continue to remain the same. The only thing that changes is your taxes and your insurance. When those things change, it will affect the overall mortgage. Does that make sense? If you have questions about that, send me a DM or put it in the comments. Other types of FHA loans, you have the 203K and FHA product. It allows you to roll the cost of your repairs and renovation expenses in your mortgage, which is based on the expected higher value of the property after the improvement. Your lender will give you a loan for the market value after repair. So if it's going to be worth 300 or 350, they'll give you a loan based on that number, making allowances for the repairs or renovations. You're not going to get a separate check. For example, if the house is 200, you're not going to get a $150,000 check to say, okay, this is what you're going to use to do the repairs. What you will do is that the lender will set that money aside in escrow, and you will hire professionals to do the work. They will bid for the work, and they must be approved by the lender, and they will, as the work is done, the money is released like that. So you're never going to see that money. So you have to use that money for the intended purposes. Make sense? Okay, again, if you have questions on 203K loan, I do have a video about that. It might be this video here, right here. Yes. Check out this video, and then if you have any more questions, send me a DM. I'd be happy to answer them for you. But yes, a 203K loan is another product of FHA loans. So you have the FHA fixed, and then you have the FHA adjustable. And when we talk about adjustable, it means just that. You have a fixed rate for about 3 to 7 years, depending on your loan. And then after that, there's a potential that the interest rate can change. And once the interest rate changes, it will change your mortgage payment. That's why interest rates are so important to your mortgage payment. When you're buying a house, most people want to get a low interest rate, because the lower the interest rate, the better the payment. I know interest rates right now, currently while I'm making this video, is about 6.25% right now. So they seem to be a little lower than they were before, but that still affects your payment. And if that is adjustable, your 6.5% interest rate after a few years might go up to be 8% or 9% or 7%. And if that happens, that will affect your mortgage payment as well. Now, one of the things with the ARM mortgage is you can refinance. So if you want, let's say you get this ARM for a few years and the interest rate has been stable, and let's say the interest rates lowers, then you can refinance if you wanted to get the lower rate and to have it at a fixed rate. So that is definitely something that you want to consider if you have an FHA ARM mortgage, adjustable rate mortgage, you might want to keep your eyes on interest rates, and any shift in the market in your favor, you probably want to refinance then. So, how do you qualify for an FHA loan? Now, I've already told you they are very flexible and they are very lenient. I know most people disqualify themselves because they say, I don't have the credit score and I don't have the savings, and all the negative things that they say about themselves that makes what they're saying true, because now they really can't buy a house because they don't believe they can. But here's how you qualify, because again, it's very simple. All you need to do to qualify for that FHA loan is to have your credit score where it needs to be, have a lower debt to income ratio, and have a 2 years employment, and have, is it 2 years employment, um, decent debt to income ratio, and have the credit score. And for some of you, you don't even really need to have that much money. I tell my buyers at least have the upfront cost on hand. And when I say upfront cost, I think I have a video about that somewhere. The upfront cost of buying a house, which is like the escrow, the inspection, and the appraisal. If you have that, your real estate agent should be able to help you to come up with closing costs and even down payment in some instances, if they are knowledgeable about down payment assistance program, and if they're able to negotiate with the seller to help with closing costs, then you might be able to do this with little to no money out of your pocket. So look into that. FHA is one of the loans that most down payment assistance really couples with really well. So you might be able to get into a house for minimal money, or sometimes no money at all out of your pocket, except for some of the upfront cost. So look into that. If you have the credit score. Now, again, I said the FHA credit score requirement is 580. Now, if you go talk to a lender right now and all you have is 580, if you have a decent amount of assets, you might still be able to qualify if you have the money, because what happens is the lower your credit score, and 580 is considered to be a low credit score. So the lower your credit score, the more you will have to come out of pocket. I think if you can qualify for a 580 with a 580 credit score, then you might need to put down about 10%. So instead of the normal 3%, you may have to put down 10%. Most lenders are going to require that you at least have a 640 because it works better for you. All right? If you have questions about credit, or if you're struggling with your credit right now and you need some help to get your credit to where it needs to be, or you need some advice, and I'm not an attorney, so I can't really give you professional advice, but you want some ways and some means to fix your credit, even do it yourself, or if you want somebody else to do it for you, send me a DM. I'll be happy to connect you with some of the people that I use. But for the most part, I try to encourage first-time home buyers to work on your credit themselves, because number one, it's your credit. You have to be invested in it. And also it will save you money. Most of the programs out there, the credit repair programs, it's another monthly expense. And I don't think you need any more expenses if you're trying to buy a house. So if you want steps to fix your credit yourself, I actually have a do-it-yourself credit repair guide. If you'd like a copy of that, just comment repair guide, and I will send you an email, or you can send me an email and or DM. If you send me a DM, make sure you put your email address in there so I can just send that do-it-yourself guide to you directly. So this is how you qualify. You don't need a lot. So you're going to have a valid social security number to qualify for that. You have to be a lawful US resident. You have to meet FHA loan credit requirements. Remember I said 580. However, I like to say that the lenders, most lenders, because there are lenders out there that will qualify you with 500 credit score, 580 credit score, 600. There are lenders out there that you just have to find one. But a 600 and a 640 credit score will serve you better than a 580 when you're looking to buy a house. You have to be able to make that down payment of at least 3.5% down. There are ways to come up with that. Again, if you want tips on how to save for a down payment, let's say you don't qualify for down payment assistance. If you want tips on how to save for a down payment, comment down payment and I will send you some information on how you can do that and save for your down payment. The house has to be your primary resident, okay? You cannot use an FHA loan to buy an investment home if you don't plan to live there, okay? So the house must be intended for your primary residence. Also, the house has to meet FHA appraisal requirements. They actually want to make sure that the house is actually worth what you're paying, and also that it meets the inspection, passes the inspection, so that your house is not only does it meet the appraisal requirement, but that it is safe for you to live in. Now let's talk about the cost. What does it really cost? The cost and the fees of a FHA. So like any mortgage, FHA loan comes with cost, it comes with fees, and you should understand those costs and those fees before you even start your application. So the cost of an FHA loan can be broken down into 3 categories. You have your FHA mortgage rates, you have your mortgage insurance premium, that if you're using an FHA loan and you are putting down 3.5%, you're going to pay mortgage insurance and other transaction related costs and fees, just things by getting the loan, lender fees, title fees, and all of that. It is going to cost you. That's when you talk about closing costs. I think it's all rolled up in one, and that's what that is. I also have a video about closing costs with a title company. If you want to go check it, it's this video right here. Again, if you're not yet subscribed to this channel, you want to do that, especially if you're a first-time home buyer. You want to follow, you want to subscribe, you want to know every time I upload a new video. And if you want to do that, you have to subscribe and you have to hit the notification bell so that you can know every time I do that. This channel is for first-time home buyers. This channel is going to tell you about down payment assistance. It's going to give you steps of how to buy a house. It's going to tell you what to expect, and you don't want to miss that. If you know anybody looking to buy a house for the first time in any state, actually, send them this channel. There's some good stuff on there that they might want to check into. Now, remember I talked about mortgage insurance. There are 2 types of mortgage insurance on an FHA loan. If you purchase a home with an FHA loan, you are responsible for 2 types of mortgage insurance. There's upfront mortgage insurance, and then there's annual mortgage insurance. So let me explain them for you. Upfront mortgage insurance is required at closing. So at closing, you are paying an extra, let me say, 1.75% of the loan amount. You're paying that upfront. How you pay this fee is going to be dependent on the lender. Some will allow you to roll it into the loan amount, while others require that you pay it upfront. But you are paying this upfront cost from the beginning, from the start. And then there is annual mortgage insurance. In addition to the upfront cost, you are required to pay a mortgage insurance premium on all FHA loans, regardless of the size of your down payment. While the upfront cost is a flat rate, MIP, which is mortgage insurance, fluctuates based on your loan size and your loan to value ratio. The amount you would pay for mortgage insurance depend on the size of your loan and your down payment. Does that make sense? Each year your mortgage insurance is as a monthly installment that is added to your mortgage payment. So when you calculate your mortgage payment, or when your mortgage payment is calculated, that's already included in there. It's not an extra payment that you're making. It's already included in there. Why do they really require MIP? So the biggest draw to FHA loans, or the biggest setback when most people say, I don't want to get this loan because I want to have to pay MIP, is that for many borrowers, they're available to people who might not qualify for a conventional product, right? So this could be due to a lower credit score, smaller down payment, because this creates risk. MIP is required to help lenders mitigate the risk as much as possible. So you're getting an FHA loan mostly because you probably can't qualify or do not qualify for a conventional loan. And if you're getting an FHA loan because it has lower credit score, lower down payment, and all of that, it's a higher risk for the lender. So they want a way to mitigate the risk, and so hence mortgage insurance. It's already in your mortgage. So if you can make the mortgage payment, you're fine because it's already in there. Make sense? All right. So before you proceed with an FHA loan, calculate the numbers to make sure that you are comfortable with the payments. That's why whether you're buying a house with FHA, whether you're buying it with conventional, whether you're buying it with USDA, VA, just make sure you're comfortable with the payments. If you're comfortable with the payments, then you should be fine. Remember we said that FHA requires a lower credit score. So if after you purchase the home, right, things have improved, your situation has gotten better, your credit score has improved, your home has gained some equity, and you have a loan to value ratio of less than 80%, you can probably refinance the house to a conventional loan and no longer have to pay mortgage insurance. So there's an out for you, for those of us, or for those of you who said that, well, I don't want to keep paying that extra, whether it be $183 or 100 and whatever dollars for MIP every month. I don't want to keep paying that, just giving the bank my money or just giving the lender my money. If you want to stop paying that, what you can do is just work on increasing your credit score, work making sure that you buy a house that is in an area where it can grow in equity pretty quickly. And so once you get to that place where you have 80% or less loan to value and your credit score has increased, then you might be able to get out of MIP by just refinancing to a conventional loan, and that will take care of the problem. All right. If you need a lender to talk to see what your options are, send me a DM or comment lender. I will send you a list of lenders to choose from. Don't forget, if you have questions, put that. I'm making these videos because I want to help first-time home buyers. I want you to understand what you're getting into before you get into it. So before I wrap this up, I wanted to talk to you about another benefit of an FHA loan is tax deductibility. You can use it during tax time. You can actually use your MIP payments on your tax returns. So you might be able to get some money back when you file your taxes if you're paying MIP on your mortgage. Not a reason to get an FHA loan, but if you do have one, when you file your taxes, don't forget to include that because you are paying that every month. It's included in your mortgage payment. So don't forget to use that. Give that to the tax man so you can get some money back. Don't forget that your FHA loan may come with an extra about 2 to 5% closing costs. So do make allowances for that if you are not getting closing cost assistance or down payment help to help with this cost. You want to make allowances for that extra. Remember, we're talking about the extra fees that comes, or the extra cost that comes with buying a home, and closing cost is one of them. So even though you're doing FHA loan, it's still going to come with some closing costs that I did touch on. I just wanted to highlight that in this video again, that these costs, they will not go away unless you can get somebody else to pay them for you. And if you're looking for a real estate agent that can do that, feel free to reach out. I'd be happy to help you. It is all about negotiation and having conversations with sellers and realtors to make your dream of home ownership a reality. I mean, guys, if you want it, it's there. All you have to do is take the first step. The first step that you take to becoming a homeowner is reaching out to a trusted real estate agent. It doesn't have to be me. I would love it to be me if you're in the Tampa Bay area, but if not, reach out to somebody that is familiar with down payment assistance programs in whatever state or city that you're in, and start their FHA loan program. Is one of the simplest programs that you can use to buy a house. So don't sleep on it, especially if you're already paying the mortgage and you're just ready to take the next step into home ownership, and you don't think you'll qualify for a conventional loan, because some of them do require that you put down a little bit more. Today I wanted to just focus in on FHA because it's one of the simplest ones that you can do. So don't forget to don't forget to subscribe to this channel. And again, if you have questions, put your questions in the comments, or if there's a program you want me to dig a little deeper into for you, I'd be happy to do that. Until next time, bye.